ICT traders, are you confused by the ICT macros? And do you want to know how successful they are and whether you should be trading them? Within 5 minutes, I'm going to show you the stats on the ICT macros and give you something that is way, way better. Now, as you know, I am a Goldman Sachs and JP Morgan veteran. I spent years on the trading floor, really understanding how the trading desks function. So all of my trading philosophy is based off of what the institutions are actually doing and real world market events which move the market. And this is why I have found a macro that is more predictable than the ICT macros that you've been told. Ultimately, as a retail trader, you need to have a view on the market, whether price is going to go up or down. And then depending upon whether you're bullish or bearish, you need to be sure that the high or low of the day has been put in, so then you can take your trade. So once you think the low of the day has been put in, you can then take longs. Or once you think the high of the day has been put in and you're bearish, you can take shorts. Time-based ranges are your key to this. So in this free trading lecture, I'm going to show you why the new range I found is way better at predicting when the high or low of the day is going to take place. And I'm going to do that using AI. So this is a fantastic tool from Edgeful. It only came out a couple of days ago, and it allows you to build your custom reports using AI against real market data. If you would like access to Edgeful, there's a link in the description to this video. So the question I'm going to ask is, build a custom report which shows the frequency of the high or low of the day taking place between 9:50 a.m. and 10:10 a.m. for NQ year to date, because I want to know whether this ICT macro will help me to decide whether the high or low of the day has been put in, and then I can catch something like a silver bullet trade. If the statistics show that it's unlikely that the high or low of the day has been put in at this time, then this time means nothing to me. And I will show you a much better time-based range, which will give you that. So hitting search builds a methodology for my query. For each trading day, we look at the intraday bars within the requested session. We identify the high or low of the day, and we define that 20-minute window, which is between 9:50 a.m. and 10 a.m. And then for each day, we check whether the high or low of the day has been put in. So let's save the report. We'll call it ICT Macro. And let's run the report. So we want it for NQ, and we care about electronic trading hours only. Remember, the price action that happens during the overnight session before 9:30 a.m. statistically does not show you any trends. And you can click the video in the top right-hand corner explaining this with statistics. So let's set it to NQ and use a year's worth of data and find out whether the ICT macro will tell us whether the high or low of the day has been put in. So what have we found out? So within that ICT macro range, the high of the day happens 6% of the time, and the low of the day happens 5% of the time. So in aggregate, the high or low of the day has been put in 11.8% of the time. So what does this mean? It means you've not caught the high or low of the day. So you can easily get taken out, or you may be way too far away from the high or low of the day. So let me show you something that's way more powerful than relying on the price action between 9:50 a.m. and 10:10 a.m. So let's create a new custom report. So instead, let's ask AI, what is the frequency of the high or low of the day taking place between 9:30 a.m. and 10 a.m. for NQ year to date? So remember, we are looking to beat the ICT macro statistic of 11% of the time. So clicking search and reviewing the methodology, we like this. We'll call it real macro range, and we want it year to date. We want the session to be the regular trading hours, and we want it for NQ. So we're looking to beat the 11%, which is the ICT 9:50 a.m. to 10:10 macro. So here we go. The high tends to form 30% of the time within that 9:30 a.m. to 10 a.m. range. The low 37% of the time happens between 9:30 and 10 a.m. And the cases where the high or low are not formed within that window is 32%. So what are we saying? 68.3% of the time. This is your time-based range. You want to wait for this range to occur. Your high or low of the day is then in place, and now you can start taking your trades. Focus on the open. Now, why does this happen? Remember, I'm ex Goldman Sachs, ex JP Morgan. I don't buy into the concept of a magic algorithm running the market. I use real world factors for my trading. At 9:30 a.m., the equities market opens. That is your volatility. All the trades are then executed between those times. That's why the market moves. That's why it is the window you need to focus on. If you would like me to teach you exactly how I trade index futures, metals, energies, currencies, and crypto, there's a link to my mentorship below.